Donald Trump has once again dropped a proposal that's sending shockwaves through Washington, Wall Street, and living rooms across America. This time, it's not about borders, wars, or foreign rivals. It's about something far more personal to millions of Americans: credit card debt. Trump says he wants to cap credit card interest rates at 10%. Just 10%. And while that number may sound small, the impact behind it could be massive. To understand why this matters, you first need to understand how bad the situation already is. Right now, many Americans are paying interest rates of 20, 25, even close to 30% on their credit cards. That means if you're carrying a balance, a large portion of your monthly payment isn't even touching the original debt. It's just interest. People are working, paying, and still falling further behind. For many households, credit cards are no longer about convenience or rewards. They're about survival. Trump's argument is simple and direct. He says these interest rates are out of control, disconnected from reality, and crushing working Americans. According to him, banks and credit card companies are making record profits while families struggle to afford groceries, rent, gas, and healthcare. In Trump's words, a 10% cap would give Americans breathing room, time to recover, stabilize, and get out of the debt trap. But the timing of this proposal is just as important as the policy itself. This is coming at a moment when household debt in the United States is at historic levels. Credit card balances have surged over the past few years as inflation pushed everyday costs higher. Wages haven't kept pace for many workers, and savings were drained during earlier economic shocks. For millions of people, credit cards became the gap between income and expenses. Not for vacations or luxury items, but for food, utilities, and medical bills. Trump is tapping directly into that reality. He's also making a political calculation. Credit card debt doesn't belong to one party. Republicans have it, Democrats have it, independents have it, young people, seniors, middle-class families, small business owners. Almost everyone understands the pain of opening a statement and seeing how much interest they're being charged. By targeting credit card companies, Trump is positioning himself as someone willing to take on powerful financial institutions on behalf of everyday Americans. That message resonates. Supporters of the idea argue that a 10% cap is not radical at all. They point out that in earlier decades, interest rates were far lower, and the financial system still functioned just fine. They argue that today's rates are driven less by risk and more by profit optimization. In their view, credit card companies have become too comfortable charging extreme rates because consumers have few alternatives. They also argue that even at 10%, lenders would still make money. After all, credit cards are unsecured loans, but they're also supported by fees, penalties, and transaction revenues. A cap, they say, would simply force companies to rebalance their priorities away from exploiting revolving debt. But critics see a very different picture. Banks and financial institutions warn that capping interest rates could backfire. Their argument is that higher rates exist because of higher risk. If rates are capped too low, lenders may stop issuing cards to borrowers with weaker credit profiles. That could include young adults, lower-income families, or people recovering from financial hardship. In other words, the people who rely on credit the most could suddenly lose access to it. There's also the concern about unintended consequences. If interest revenue drops, credit card companies might respond by raising annual fees, reducing rewards programs, or tightening approval standards across the board. Some analysts warn that consumers could end up paying in different ways, even if interest rates fall. And then there's Congress. Even if Trump strongly supports this idea, it wouldn't automatically become reality. Implementing a nationwide interest rate cap would likely require legislative action. That means debates, amendments, lobbying, and political gridlock. Republicans are divided on the issue. Some see it as a pro-consumer move aligned with economic nationalism. Others see it as government interference in free markets. Democrats are also split. Progressive lawmakers have long pushed for interest rate caps, but many are wary of giving Trump a major policy win on an issue that polls extremely well with voters. So the proposal exists in a strange political space: popular with the public, controversial with industry, uncertain in Congress. Another layer to this story is how financial markets interpret it. Investors don't just react to laws, they react to signals. And Trump's proposal signals something bigger than a one-year cap. It raises questions about whether broader financial regulations could follow. Could this open the door to more aggressive consumer protections? Could other forms of lending come under scrutiny next? Markets dislike uncertainty, and that alone has made analysts nervous. Trump, however, appears comfortable with that tension. He's framing the issue in moral terms rather than technical ones. From his perspective, charging struggling families 20+% interest during an economic squeeze is simply wrong. And he's betting that voters will agree, even if Wall Street doesn't. There's also a strategic aspect that many observers are pointing out. Even if the proposal never fully becomes law, it still reshapes the conversation. It forces banks and lawmakers to defend the current system. It puts credit card interest rates under a spotlight that hasn't existed in years. And it gives Trump a clear, repeatable message. He's fighting for people buried under debt. For millions of Americans, the appeal is obvious. A 10% cap could mean real savings, hundreds of dollars a year, sometimes more. For someone living paycheck to paycheck, that's not abstract policy. That's groceries. That's rent. That's gas money. That's peace of mind. But there are risks. If expectations are raised too high and the policy fails to materialize, the backlash could be significant. Voters don't forget promises that hit close to home. And if a cap is implemented poorly or leads to reduced access to credit, the political consequences could be just as severe as the applause that greeted the idea. So where does that leave things right now? At this stage, Trump's proposal is both a policy idea and a political statement. It reflects where economic frustration in America has reached. It reflects a growing willingness across party lines to question whether the financial system still serves the people it depends on. And it reflects Trump's instinct to turn complex economic debates into clear, emotionally resonant choices. For some, this is bold leadership. For others, it's risky populism. But one thing is undeniable. The idea has struck a nerve. Because when millions of Americans look at their credit card bills, they don't see percentages or policy debates. They see stress. They see debt that never seems to shrink. And they see a system that feels stacked against them. Whether Trump's 10% cap becomes law or not, it has already done something powerful. It's forced a national conversation about how much is too much, who benefits from the current system, and who pays the price. And in a political climate where attention is everything, that alone makes this one of the most important economic stories right now.